Hey, what's up? My name is Alex and I help people with health insurance. Today I want to talk to you about premium tax credits. This is a very important part of figuring out what you're going to pay for an individual health insurance policy in the health insurance marketplace. It's what's designed to put the affordable in the Affordable Care Act. Okay, the premium tax credit is basically a subsidy from the federal government that pays part or sometimes all of the cost of your health insurance plan. Won't get into the mechanics of how they come up with a number, but the main thing we need to do for right now is we need to understand it's a factor of your household size and, for our purposes today, your household income. And that's what I want to talk to you about because it's very important. If you mess this up, it might mess you up when you do your taxes. Here's what I mean. Let's say, for the case, just using an example, you estimate that your household income is going to be $80,000, okay? Most people don't know what they're going to make in a year. You can ballpark, and that's basically what we're doing. We're making a good faith estimate. So let's say your good faith estimate is $80,000. And based on the other details, the government says, hey, that's great. We're going to give you $5,000 this year towards your health insurance costs. And typically that comes out monthly. So it'd be, $400 and something a month, right? Now, what you need to understand, which is so important, is that this estimate is going to be reconciled with your actual income at the end of the year when you file your taxes. That's why the premium tax credits, okay? Let's say, for the sake of our example, instead of $80,000, you had a good year and you made $100,000. Now, I want you to keep in mind, I am absolutely 100% making up numbers. I majored in history, not math, so I'm trying to keep this part simple. But let's say at $100,000, they say, well, you got $5,000, but really you only should have gotten $4,000. So even if you didn't major in math either, there's a difference here. You got $1,000 too much. So guess what? You owe them that $1,000 back. It's part of your taxes. It's going to be deducted from your refund, or if you owe taxes, you're going to owe an additional $1,000, however that works out. And that's a real bummer, okay? But the good news is if you have a kind of a not so good year. Let's say instead of $80,000, you made 70. Again, stressing, totally making this up. At $70,000, you should get a $6,000 premium tax credit in our example. And so guess what? They're going to say, we only gave you $5 this year. Here's $1,000, and it's going to be a credit to you on your taxes. It'll be part of your refund or whatnot. Okay, it's just so important to do the best we can with this estimate because I've seen it really mess people up when it comes time to do your taxes. And I want you to understand how it works. I'd love to help you if you need it. See me in the comments.